Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium only video, so I hope you guys enjoy the content. This video, the special topic for this week is actually going to be very short, but I think it will be among the most useful things. And if you're already on the Telegram channel, then you're aware of this. So I'm starting to release some of these indicators, the TradingView indicators, to you guys so that you guys can use them. And I'm doing this because as Bitcoin, the price is rallying, things could get out of control, especially over the next several years. I want you guys to be able to use them rather than having to like squint on the videos to see them. And so I thought, it's a pain for me to have to go through and add everyone, but it's worth it because that means you guys get to then use them, and hopefully they can be useful to you guys. So this video, I'm just going to quickly show you the primary three that I'm going to focus on getting out first. I'll continue to do some over the next few months or so, but the first three that I'm putting out, the first one is just this band, which is it's pretty simple actually. It's just the 20-week SMA and the 21-week EMA with a color-coded region in between them. That's all it is, and essentially it acts as our bull market support line during a bull market. This is where we hope to hold the line, and in fact we did it recently as well. And dropping below them is not a good thing, right? This one's not, but dropping below them is not a good thing. But if we can hold it as support like we did last market cycle, then the sentiment from these 20 to 30 to 40% moves down the sentiment can change on a dime. So this is the first one. The second one that you'll get access to will be the regression band, and I imagine many people would want this one, so you'll get access to this one, the one that's essentially fit to this non-bubble data at the bottom and then the peaks at the top. And that way over time you can investigate, okay, where are we within the grand scheme? Are we still playing in the sandbox mode? Are we coming up to the surface and looking up to the sky, and we're coming up all the way up here? Where are we? And hopefully it can help keep you more resolute even when things get crazy. And then the third one that I'll do after these two is just the Ethereum regression curve as well. So those are the three main ones that I'm working on initially. After these are out, I'll probably start working on some more as I have time, but I just want you guys to be aware that going forward, I am starting to provide access to the TradingView indicators. And in fact, I think about 500 or 600 people should already have access to the bull market bands. So this one, about 500 of you should already have access. And I think about 100 people or so have access to this one. And the way you can find it, if you're not sure if you've been added or not yet, you would just go up to this little symbol right here, and you'll see it under invite only scripts. Okay. Now, if you go to invite only scripts and you don't see it, it's because I haven't added you yet. In order to get added, you need to fill out the form, there'll be some information you have to fill out. You can find that form linked in the weekly email corresponding to this video. You can also find it in the Telegram alerts channel, and I'll also post it on Patreon for those people. If you don't see yourself added to the indicator, then you don't need to message me right away. I'm still working on going through them. There's still a ton of people that have not been added yet, and it's going to take some time to get through them. But just know that is what I'm working on. And I thought because of how time consuming it is, and also how useful these will be, I've had a lot of requests. I thought it would be relevant to just make it the special topic for the week, since it is taking up a lot of my time to get you guys access to these indicators. So with that said, now we can just take a look at the markets. They've been really exciting recently, and our goal of accumulating Bitcoin at this band, when we were testing the 20-week moving average, remember what we said all along, and we're talking about in the alerts channel and for weeks, about a month and a half, was that this was the time to be accumulating Bitcoin. Not necessarily because it has to go up, but if it goes down, then alts will bleed against Bitcoin, and as long as it keeps testing it, most alts will bleed against Bitcoin, and if it goes up in the short term, most alts will bleed against Bitcoin. And so we said, you know what, we're testing the 20-week, it's probably best to huddle back to Bitcoin. It doesn't mean necessarily sell your positions, but if you're DCAing into the market, Bitcoin was the main focus. And then once Bitcoin got above the 0.5 risk band, which was around this point, I stopped purchasing Bitcoin. And now that it's gone into bubble territory, we as I showed on the Telegram channel, the alerts channel, the private one, that it was time to focus on Ethereum and maybe some altcoins, right? But my main focus has been Ethereum, and Ethereum has actually done really well. I mean, it might not seem like it, but it has rallied quite well over the last few weeks. From a low of 313, it's now up 40%, and so the point again is as we've noted before, the Ethereum Bitcoin ratio. We've talked a lot about that. Let me just pull it up again. We recognize that it does not have to repeat prior cycles, right? We know this, but we also recognized it last time, and I made that, I speculated on it anyway, and it worked out, right? And the idea, and I'm not going to draw them all out, but the idea is the Ethereum Bitcoin ratio bleeds in Q4 and then tends to pump in the first quarter of the year. But that doesn't necessarily mean that the best buy is always in December, right? I mean, it could be the best buy, but this one was not. The best buy was in September last year. But still, December was a good buy. And you can see that over the macro scale, just like it has in previous years, the Ethereum Bitcoin ratio has been bleeding over the last several months. So I would say it's setting up pretty nicely for another move of Ethereum against Bitcoin, especially if Bitcoin remains bullish. I mean, if Bitcoin is holding the 20-week moving average, I think there's a really great chance that the Ethereum Bitcoin ratio is going to bounce at some point. And if it does bounce here, let's say it bounces here and goes up, it still might mean there's a good December buying opportunity. It just might not be the low. And this is why I've been DCAing all the way down. And some people, right, naturally will say, well, if you think the low is going to be, if you think Ethereum, the buy of Ethereum with Bitcoin in December would be the best, why not just wait till then? Well, again, the reason is because you don't want to put all your eggs in one basket and necessarily try to identically time the bottom. It's better, in my opinion, to just try to slowly adjust to these momentum shifts in the market rather than, pretending like we all have crystal balls and know exactly what's going to happen on any given day. And, yesterday Ethereum was moving against Bitcoin, but this is not what we're looking for, right? This is not the momentum shift, right? This is just a daily move. These wicks, I mean, this is a weekly candle, but these moves are more daily moves or small time frame moves. We don't care about that. We want to see a continued rally, right? And that might not happen immediately. It could, and the way that it would is if Bitcoin chills out. But I mean, Bitcoin volatility is still relatively high. But if it can chill out for a little while, even if it slowly bleeds, I think Ethereum can still do pretty well, because Bitcoin, even with the recent drop from 16K down to 15K, even with that recent drop from up here, we're still, fairly significantly above the 20-week moving average. The 20-week moving average is 24% below, or you can see the current price is about 32% above. And actually, this is the VLX, so it's not going to be perfect. It's higher than 32%, but it's over 30% higher than the 20-week moving average. And this is still quite substantial, and it would be great for altcoins to do well. There's a good chance that altcoins would do well if Bitcoin were to start moving sideways, or if it were to go down and then move sideways, at a very bullish level above the 20-week moving average. Note that the 20-week moving average is about to hit a all-time high. So you can see the 20-week moving average all the way over here, and you can note that, well, we're about to cross that threshold right here, and this was our prior all-time high, just at around 11.2 or so, and the current 20-week moving average, according to this, is 11.1. So we're just shy of the all-time high of the 20-week moving average. Now, one of the things I want to talk about too, right, is we've been focusing on Ethereum. At least I've been focusing on slowly increasing my portfolio percentage of Ethereum. I've also been continuing to pick up a little bit of Polkadot every single week, and will continue to do so for the remainder of the year. And then I have not been getting ADA, as I mentioned, And the reason is, again, I do think that a lot of times these coins, a lot of these altcoins will bleed against Ethereum when Bitcoin volatility is really high. And the trend against a lot of altcoins against Ethereum can generally be down. And you can see ADA, as we've said before, right? It tends to have these peaks that, of course, that are essentially the same level, but the overall trend is actually down. And so we are getting to that point, as I mentioned months ago. The key way that I would want to move some Ethereum into ADA, I really like protecting my Ethereum as much as I can. The key way that I could see myself moving a little bit of the Ethereum into ADA is if the ratio continues to go down, but in an Ethereum bubble. So if Ethereum bubbles against Bitcoin, right, and it goes up, and if say like it's bubbling against USD and it goes up, this could create a timely opportunity to DCA part of that Ethereum to ADA. Now, I would not DCA all of my Ethereum. Even the 1/10 of the Ethereum that I would sell would not all go to ADA, but that would be a scenario where I could see myself purchasing more ADA with Ethereum. Now, if we look at the risk dashboard, you can see the ADA Ether risk is actually really low at 0.217. So I've often said if you don't own any ADA, this is probably a reasonable time to accumulate it. It's not financial advice. You guys can figure out if it's ADA that you want to accumulate or not, but it is a relatively low risk level against Ethereum and against USD. When we first started talking about ADA back in 2019, around 2 to 3 cents, and the USD risk was below 0.4, I said I was buying it up to a risk level of 0.4, which corresponded to 10 cents. You can see now that approximately 10 cents corresponds to 0.35. So the risk levels have adjusted. We know they're dynamic. So you could argue that we're back in accumulation mode, and we are. For ADA, I believe we are in accumulation mode. And if I did not own any, I would buy some. However, I do already own a significant percentage of it, and I'm more so looking for a key swing if the Ethereum ratio bubbles against Bitcoin, as we're hoping it does over the next few months. A lot of times it happens in Q1, so we'll be keep an eye on that. If that were to happen, and we see the ADA Ether risk continue to plummet, then this could create a key, just swing opportunity to say, you know what, we rode Ethereum, we focused on Bitcoin when it was near the 20-week and when it was pumping. When Bitcoin got above 0.5 risk, we switched over to Ethereum. Then if Ethereum pumps and it gets above 0.5 risk or goes to whatever risk band you want to sell at, whether it's 0.55, 0.6, 0.65, and then you want to sell some, you could say, you know what, I want to sell some to ADA because the risk is really low. Now, I also understand that a lot of people just are not as big a fan of ADA as me. The main three that I would say are the most important are Bitcoin, Ethereum, and Link. If I had to pick 3 coins in my portfolio, it would be these 3 coins, simply put. ADA would be number 4, Bella. You could also treat the A as an altcoin. It could just be any altcoin. It could be, VeChain, Atom. If you want it to be like Tezos, whatever you want it to be, it can be a different one. And a lot of them behave in the same manner. A lot of them do bleed in the same manner, as we showed in the premium video last week. So you could pick out whatever altcoin that you're interested in. You could pick out a couple if you want, but just recognize that a lot of them will have similar trends against Ethereum. You can see that these risk levels are not as confident because they haven't been around nearly as long, but you can see the risk of, say, Atom against Ethereum is also in the low 0.2s. XTZ against Ethereum is at 0.049. The reason it's there is because that's just the lowest value on the interpolation table that I have, that I put on here. But for all intents and purposes, you can treat this as it's about as undervalued, or the risk level is about as low as it has been against Ethereum ever. That does not mean it's necessarily a good buy, because again, the risk confidence on these is pretty low because they have not been around for even a full market cycle, or even really like half a market cycle. They have not experienced a bull market. And so because of this, the risk confidence is very low. But seeing things like this is actually good because it means the risk metric is working and it's figuring out how to adjust it so that moving forward, it'll redefine what the new normal is. So this is actually a good thing, and the more we see of this, actually, the higher we can end up raising the confidence levels, because we test the upper bound and the lower bound many times, and can figure out, okay, where's the top, where's the bottom in terms of our historical risk levels of coins against other coins, which are just functions of price, time, and volatility. So again, so Bitcoin, Ethereum, Link are the main three, and then ADA is the other one, right? We focused on Bitcoin when it was time to focus on Bitcoin. One of the common questions I got was, well, why not just wait to buy, to buy Ethereum in December, right? Why buy Bitcoin with the idea of converting it? Well, you guys can see why. If by buying Bitcoin at $10,000, $11,000, $12,000, watching it go to 15K, 16K, etc., you can take profits back into Ethereum and purchase a lot more Ethereum because the Ethereum Bitcoin ratio was bleeding during that time. The Ethereum Bitcoin ratio has bled at the most 34 to 35% over the last couple months or so. So a pretty substantial bleed from the top to the bottom. Well, these are just wicks though. So moving forward, it's still Ethereum is the focus. I'll be accumulating Ethereum as long as the risk is below 0.5. You could make the case to create a gray region once it does hit 0.5 risk. If you the current 0.5 risk for Ethereum is 525. If you want to be a little bit more aggressive, or say create like a gray region in between where you buy and where you sell, you could maybe sell at a higher risk level like 0.525. Another idea is you could stop buying Ethereum at a lower risk level, like 0.45, and then sell at 0.5. Again, it's all based on what your own risk tolerance is and where you see things going. Now, again, I'll use this opportunity to remind you that the risk of Ethereum will likely never get to the 0.9 to 1 risk band again. And that's the reason why I assume that this will be 1 risk band, also 1/10 here, 2/10 here, 3/10 here, and 4/10 here. This is the idea. These prices will adjust, right? They're dynamic. It does not mean by the time that Ethereum gets to say 0.85 risk, the price will probably be a lot higher than 1894. That's just what it would be if it went there today. So if Ethereum went to say 1894 tomorrow, I would be essentially completely out of the market for Ethereum. So anyways, the 0.5 risk level is 525 for Ethereum. For Bitcoin, the 0.6 risk level is 17203. And yesterday, or a couple days ago, I was in the Telegram alerts channel posting a lot of alerts on this and talking about where we were in the grand scheme of things, the idea of taking profits back to either USD if you want to get rid of the market risk, or back to Ethereum if you want to maintain market risk in anticipation of a nice Ethereum move in the first quarter of the year. So obviously getting accustomed to the risk levels is very helpful. If we take a look at stocks, you can see that we've rallied up an entire risk band since the last video, I believe. Maybe not exactly since the last video, but over the last few days, we have rallied up essentially an entire risk band. And if you're not familiar with this, I stopped buying stocks at 0.75 risk. And if we get to 0.8, I would start selling some, only about 10% though. Now, if we gold, the risk on gold is actually still too high for me. I do own some, but I'm not going to be buying it at 0.7 risk. So the next thing, Link, the 0.6 risk level, which is what I'm eyeballing for a potential DCA sell, would be 1379. But we'll see what happens, right? I don't actually have a market sell or an order outstanding right now. What I would like to do is try to let Link rally a little bit and then just put a stop loss in. And if it gets triggered, it gets triggered. And if it doesn't, just continue to let it rally up. So a lot of times this could coincide with waiting until it gets to 0.625 risk, putting in a stop loss at 0.6 risk. You might say, well, why not just take profits here? You can do that, right? You can do that. The idea behind doing a stop loss is if it does come back, then at least you're taking profits in the 0.6 risk band. But if it continues to move up more or less monotonically, then you can push the profit-taking area even higher. So we'll see how the market's doing at the time. If it gets to this level and the Bitcoin risk is still this high at 0.55 or so, I will not sell the Link to Bitcoin because I think that the risk of accumulating Bitcoin right now is too high. So in fact, I would look here and say, I don't necessarily want to go to USD, but if it does, if the risk of Link on gets to say into the 0.6 risk band, then I might actually go to Ethereum despite the fact that it's the lowest risk. And that's just because Bitcoin has rallied 50% essentially over the last month. And if we quickly, I did a video on this the other day, but if we just quickly take a look at the Link Bitcoin valuation, you can see we're back within our essentially like this exponential fit to non-bubble data, our theoretical reaccumulation zone. And if we look at this chart, right, which is what we've talked about before, this is the reaccumulation zone for Link. And this is why this is how it shows, having a lot of patience really can pay off, because we were identified of where the top was, and now we've come all the way back down. Just like we said, there's a good chance we're going to do. We came into it, popped out, but ultimately, as we said, we speculated the likely trend is down. And you can see we're back within the bulk of the reaccumulation zone of Link against Bitcoin. Now, it's possible we fall below, right? There's no free lunch here. We cannot claim that the Link Bitcoin risk cannot go below 0.5. It has not been below 0.5 since, late summer, maybe fall of 2018. So it's been approximately 2 years since the Link Bitcoin risk has gone below 0.5. Our point is that this is at least a general area to start accumulating, get back a position. If you were following the trades on the channel, or following these ideas and selling, what I did, right, was I sold the a 4/15 of my Link position, which ultimately meant the 2/3 of it, because I'd already sold some, but the final 4/15 that I sold was at 1850. So by purchasing Link when it's back down. By the way, those 1850 sells, they didn't go to USD. If you remember, they went to Bitcoin at around 150,000 Sats, Satoshis, and now Link has dropped down to about half that. So you might think, well, the price 1850 compared to the current price of say like $12, $13 isn't as great. But it's better when you think about the fact that it was sold to Bitcoin, and Bitcoin has rallied while Link USD has gone down. Okay, so this is the general idea. So we recognize that there's a chance it could come down here. What's a way that it could come down here? Well, one way is if Bitcoin rallies to 20K in the short term and does not give altcoins a breather to make moves on their own. So if Bitcoin starts to say rally to 20K, then a lot of altcoins will likely bleed against Bitcoin, and you might see something like this happen. Again, I would just consider it an opportunity. I do think Link has a really bright market cycle ahead of it. And as I've said before, in my opinion, it is too risky not to hold Link. There's going to be a lot of volatility. We know that. That's why we try to take advantage of these tops and the theoretical reaccumulation phase. So I hope that the TradingView indicators that we have discussed will be useful to you guys. Again, please be patient as I add everyone. Remember to sign up. You can go to the forum. I'll link it in the weekly email, so you'll see it there. You'll also see it on Patreon if you're on Patreon, and I'll also post it again on the alerts channel on Telegram, just so everyone sees it. Please don't fill it out more than once. So some people have filled it out more than once. That just makes my job a little bit harder, because then I'll see it several different times. Believe me, if you fill it out, I'll get it. Just make sure you put in the right Telegram username. By the way, some people have put in their email address. I don't need your email, I need your username. So put in your username, and some people have left it blank, and if you leave it blank, I can't really add you. So if you don't have one, if you don't have a username, you could create one. By the way, you do not need a paid version of TradingView to use this. You can just simply use the free version, and just make sure you have a username that you can put in the form, so that I can just simply give you access to some of the indicators that you guys watch me play around with on the YouTube channel. But now you can actually zoom in and see where things are, even when I'm not doing a video. So I hope this weekly report has been informative. I know we're not doing like a special topic or anything specifically, but it's just the launch of TradingView indicators, trying to continue to add value to the premium list. So let me know what you guys think in the comments. Like, are you enjoying the idea of getting the indicators if you already have access? What are your thoughts on them? Maybe suggest what are some indicators that you would like to see. What are some indicators on TradingView that you've seen me use that you want to see? And if there are some, then we can do that. Another idea that I had for the future, and maybe I'll do a poll to see if people are interested in this. But another idea would be to do maybe a course, where I just maybe one of the weekly premium videos, not necessarily a course, but maybe one of the weekly premium videos is just how to use PineScript, how to just go in and use it yourself so that you can use it. I'm not sure that would actually appeal to the majority of people, but it might appeal to a few people. And if it's only a few people, then maybe I won't make it, say, a premium video or the weekly report or anything, but it may be just a something in addition or something like that. I haven't quite figured that out. But let me just know if like how many of you guys would be interested in looking at some of the scripts, and if there is enough interest, maybe eventually I'll start trying to do that. So I hope you guys enjoyed the content. It's exciting times right now. We're in pretty exciting times, but remember to stay resolute and diligent. Any bubble, if it goes up too quickly, it will probably retrace. I can't tell you how high the Bitcoin bubble is going to go. 16K could have been the top. We could rally to 20K before retracing back down. I can't really tell you, but that's the beauty of dynamically DCAing. You can just DCA the cells every step of the way. And one strategy that some people use is actually breaking up the cells into smaller chunks, right? So if you follow me a lot, you'll know that I sell 1/15 of my Bitcoin within the 0.5 to 0.6 risk band. So in this region, and but some people, what they like to do is they like to split this 1/15 up into quarters, like into quartiles. So you would sell like 1/4 of that 1/15 position, so 1/60th. At this point, 1/60th here, 1/60th here, and 1/60th here. You might think that's a little bit monotonous, but remember the base for the 0.6 to 0.7 wristband would be 2/15, so then it would be higher, right? And then 3/15. So it would continue to be higher if you want to break it up. And this would be for people who really want to be hands-on in the market and make sure they're taking profits literally at every single major risk level, as opposed to say just taking it at like 0.5 or 0.55, because the idea behind and this was not my idea, this was put forth by you guys. The general idea, right, is if you take profits at 0.5, you might wish you had saved some of it for 0.55. And I know some people just like to only take profits at 0.55. The issue there is when you don't make it to 0.55, if it peaks at 0.54 and it goes back down, then it leaves people wishing they had taken profits. So there's always there's always advantages and disadvantages to each strategy. Obviously, having a lot of trades could increase tax complications. But remember, if you trade within the confines of a Roth IRA, or an IRA in general, then it can protect you against taxes on those trades, which we talked about in a premium video a few weeks ago. But just a word of just to note that is one strategy, to just break up the cells even further and try to hit literally every single risk level. And that way no matter what really happens, you're selling a little bit near the top, and then if someone in the future says, "Did you sell the top?" you can say, "Well, not all of, I sold a small position of it at the top, but probably not most of it, because you were just dynamically doing it as you go up." But the base multiple would increase as you get to higher bands, because if you follow dynamic DCA approach with linear scaling, the base of say 1/15, 2/15, 3/15, 4/15, and 5/15 increases by that each risk band. So hopefully you guys enjoyed the content. Again, let me know what you guys think about these ideas in the comment section below. Hopefully you guys also enjoy the TradingView indicators. Give me some time to give you guys access, and I will see you guys next time. Bye.